Good afternoon, ladies and gentlemen. Tuesday, February 20th, 2 p.m. Eastern Time. This is the Bitcoin Show, and we are joined by a very special guest, his second time on the show, this time with video, NLW himself, Nathaniel Whittemore of the Breakdown podcast, and a bunch of other really great, content avenues. NLW, Nathaniel, welcome to the show, and thanks for coming again.
Yeah, excited to be back. Thanks for having me.
Absolutely. We have a lot to dive into. Last time you were on the show, we talked about what the ETFs could mean for Bitcoin. Now we have some data that we can go off of to, just kind of dive into what they do mean for Bitcoin. Quickly, I want to make sure everybody knows the show happens every Tuesday at 2 p.m. Eastern. It's available on Apple and Spotify podcasts, Twitter Spaces, X platform video, and YouTube, of course, for the video feed. Today's show is brought to you in partnership with Trust Machines. Trust Machines is focused on growing the Bitcoin economy by building applications all on Bitcoin and its various layers. For more information on Trust Machines, follow them at Trust Machines Co. on Twitter and visit trustmachines.co to learn more about the future of building on Bitcoin. Real quick, they're also looking for feedback through a user research forum about Bitcoin and DeFi. So check out the pinned tweet. Clemente has it pulled up on the screen. He can get a link going on the YouTube feed also. Any feedback would be appreciated, and it will help the way Trust Machines pushes DeFi and Bitcoin forward. So Nathaniel, just to kind of get into it, I want to talk about a lot of different things. I want to talk about the Bitcoin ETF and what we've kind of seen thus far. I want to talk about the potential of an Ethereum ETF. Talk about when retail is going to get into Bitcoin, because you've been talking about this a lot, and I have some theories from my end too on the NFT side of the crypto market. I want to talk about Bitcoin equities and also some crypto companies that are slated to go public next year. But first, I have to ask the man himself, what is the breakdown for today, Nathaniel? I didn't see if you've posted a breakdown show yet today. What is today's breakdown?
I have not yet. It's actually so there's a big dust up yesterday with Coinbase moving support away from Lightning basically, and it's sort of paired nicely with a Twitter conversation from Russell Okung about whether people in Africa preferred Tether and things like that to Bitcoin and what that meant. And so, I'm digging into that. I think it's a meaningful conversation to have, outside and around the sort of price hype and excitement that we've had with the ETF. People are constantly trying to understand what Bitcoin is for, and it's okay for that to be an evolutionary understanding based on real evidence in the real world, and have it be sort of diverse and different for different people. So that's what we're talking about today.
Absolutely. Well, I'm actually glad that you brought that up. That obviously wasn't on my schedule, but I'm curious. So to me, when I think about it, from what I know, it seems like Africa and South America seem to be the continents that have countries that kind of need Bitcoin the most, just because of histories, their histories with currency debasement and currency issues. Am I on track with that, or am I out to lunch?
For sure. But I think that I don't mean this to sound at all pejorative, but like, if you spend any time in these places, the idea that Bitcoin is going to be a more relevant daily thing than something like a synthetic digital dollar, that's close to a US dollar on digital rails, is just, it's insane. Like there's no universe in which that wouldn't be the case. And I don't think it's at all diminishing to Bitcoin, right? So if you look at these markets, if you look at like Argentina, for example, these are places where dollars have for an incredibly long time like played the release valve role from local currency. In Argentina, it's the blue market rate is sort of the unofficial rate versus the government's official rate, and just everything that can be done in dollars is done in dollars. So having access to something like Tether or whatever, that's easily accessible, and is basically filling that same function, is going to make tons of sense for people. They're not concerned necessarily in a day-to-day way with savings technology, if that's sort of what you view Bitcoin as. And frankly, the people who spend a bunch of time like starting with using something like Tether often find their way to Bitcoin as a savings technology for the part of their money that they have the privilege of saving. It's just, for a lot of people, there is no savings there. It's completely sort of, day-to-day, week to week. And so what they want is a functional technology or a functional currency that looks exactly like what they're already using, just in a faster way. So, the dollarization of the global economy and the fact that people continue to opt into that it's much more of an indictment against local fiat currency regimes than it is against Bitcoin. And like I said, I think that if you talk to people who have been inside those systems and who actually have access to save part of their wealth, they often find their way to Bitcoin as well. So I don't know. I think it's like I said, I think it's an important conversation to have, but I think that people should not be so surprised that where those preferences lie, just based on sort of the reality of the world as it exists today.
Absolutely. And I want to talk a little bit later about, central bank digital currencies versus like, worldwide dollarization through, stable coins like USDC or Tether. On this subject, last thing on it, it seems like it's about Lightning versus anything else. Does it, on the Bitcoin side, does it matter if Lightning actually works? I know everybody sort of wants it to work, but couldn't another L2 just end up getting built that, serves the purpose better? So I don't know if I view it as super important for Lightning to reach mass adoption versus just like, something to reach mass adoption on the Bitcoin side when it comes to having a cheap instant transaction method for Bitcoin.
I think that probably, a lot of people would answer that question in a, what time scale are we talking on, right? I think that if you put the question to people, ultimately, would you choose, like, does it matter to you that Lightning specifically, hits mass adoption or something hits mass adoption? They're probably going to opt for something. The reason that people are, I think, meaningfully or kind of reasonably concerned with, Lightning having, fewer options to grow and develop, which is what some of these institutional decisions can amount to, is that it's right now it's the best contender for that, in a lot of ways. And it sort of, for many people represents the closest thing to sort of Bitcoin principles. And so, even people who ultimately are agnostic about what solution wins there relative to sort of being an authentic sort of native Bitcoin solution that's not, captured by some sort of, centralized third party, there's still a reason to want, Lightning to have more of a chance to succeed and to have more support, so it's kind of like, I think it's more nuanced than the Twitter takes. But certainly ultimately, I resonate also with the sort of idea that, like, look, what matters is Bitcoin being able to be used however Bitcoin needs to be able to be used. And, whatever solution ends up being the winner for that, in a way that sort of, keeps with the things that make Bitcoin unique relative to other currencies is fine.
Appreciate the insight. So moving on to the ETFs, last time you came on the show, it was before the ETFs actually went live. Now we have, 10 or 11 ETFs actually trading every day. We actually saw Bitcoin hit a 52-week high an hour before, the TradFi markets opened this morning, which I got a kick out of, because the way I think about it is that the crypto market is just making the ETF folks pay a little bit more money, and so, the number that I see getting thrown around is $500 million of inflows per day. Obviously GBTC's outflows have been a story, and there's been kind of like a few different discussions there. But just at a high level, I want to dive deep. But at a high level, what is your impression of the impact of the ETFs so far? Has it been, like a higher or like a higher impact than you expected, or what is your impression here about 6 weeks or however many weeks it's been since the ETFs actually got approved?
I mean, I think at this point, you'd have to be intellectually dishonest to see this as anything other than a bigger success than basically the biggest bulls could have imagined.
Yeah.
We are just barely scratching the surface of this entirely new institutional bid. It is just one, the amount of sort of like the overall assets under management is, it puts it in totally rarefied air. Two, the fact that we're a month on and flows are increasing, not decreasing, is totally unlike other products that have existed. Three, the fact that, whatever sort of the early narratives or concerns around Grayscale are, it's just that these lines have now diverged, and it's very clear that sort of the new inflows in are not just they're not even close to being matched by outflows from Grayscale. So it's just a net, aggregate of new buyers, or at least, new allocations from existing buyers. And I think that, like, what we need to keep in mind too is that this is all without these products being super widely available, right? You still have huge brokerages that refuse to offer them. You don't have any sort of, Main Street, you don't have big networks of registered investment advisors, actually putting these things in portfolios. You're just starting to see some of these firms start to kind of add allocations to Bitcoin as part of sort of other balanced portfolio products, but that's only incredibly nascent, and it's more on the sort of like recommendation stage than actually having products with it. So we are basically at the point where the institutional bid for Bitcoin through the ETFs is probably about as low as it's going to get. Especially if you move outside the vagaries of sort of any particular cycle moment, and it's still massive. I think it's just it is just officially a macro asset inside TradFi that has huge space, and I think it's just beginning.
Yeah, I mean, Vanguard, I have my IRAs with Vanguard. I'm in the process of moving them over to Fidelity because iBit is blocked at Vanguard. A friend of mine has Merrill, and he said that he also cannot buy iBit. I didn't even know about. I feel like the Merrill situation didn't really get publicized on Twitter the way that Vanguard did. So that's fascinating that you bring that up. You discussed with Scott Melker the 4-year model, the previous sort of like 4-year Bitcoin cycle, and your expectations moving forward. I find this to be one of the most fascinating dynamics with the ETF in play now. A lot of people are saying that they think that we're going to see shorter cycles. A lot of people are saying that maybe the kind of bust component of the cycles won't be as big as it has been previously. Do you think that we just have a totally different kind of 4-year landscape cycle wise for Bitcoin moving forward now that we have these institutional inflows really coming in, like you said, as strong as we could have ever imagined?
My sort of base case on this is that we're going to see different types of cycles cohabitating at the same time. And so what I mean by that is that I think that there are some interesting dynamics that will persist around the 4-year cycle. I think that the halving as this locus event, which supercharges narratives and media coverage more than anything else initially, right? And serves as this sort of reminder of this big blaring contrast between Bitcoin as this asset with a fixed price supply and reduced, issuance over time, as opposed to, profligate government money, blah, 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 right? Like that every 4-year halving cycle becomes a moment where that story gets told not by Bitcoiners, but by mainstream media and some portion of TradFi people, and it sort of distinguishes Bitcoin once again. Then you have, call it 6 to 9 months later, the sort of the actual supply shock starting to hit and find its way into the market, in the form of the sort of mining dynamics, and that's historically been when you've seen sort of the big price increases, kind of post halving. I don't know if that exactly will be the same in terms of driving price. I do think that this institutional bid is this fundamentally different force that we've never had before, that is going to have its own dynamics that don't necessarily fully or exclusively respect those things. I wouldn't be surprised, or I would be cautious to assume that that cycles will go out the window entirely because of that. Look, part of when you have a product that's very easy to enter, it's also a product that's very easy to exit, right? And the allocate, like, part of what makes this such a better allocation for people now is that it can move at the same speed as they can with any other asset. Whereas perhaps before, part of the reason that they weren't allocating to Bitcoin is that they didn't want to get stuck. It's too much of a challenge, right? So I don't think it's as clear cut as sort of the super cycle kind of things that we talked about last time, but it really is a different force, and we're seeing that now in the fact that retail is supremely not here. Not only are they not here, they're actively disinterested still.
Yeah.
And 50,000 went off without a second glance from retail. And yet it really is a continued phenomenon and growing interest, from the institutional set. So I think it's going to be weird and blurry for a little while. I think that the things that make the 4-year cycle, that have shaped it, especially in the period that surrounds the halving, are not going to go away immediately. But there's this new force that we don't exactly know how is going to interplay with the rest of the market.
Absolutely. And on the retail side, since you brought it up, we were going to get to it, but I think I heard you say on Scott Melker's podcast that 69K you feel like might be the starting point for retail. like from my perspective, given how much nobody cares at all, what do you think of the possibility that 100K will be where
What
retail?
absolutely the way that I think about it is to me it's almost like there are psychological contenders for a spot where excuse me, retail might care again. I think, for me, 50,000 seemed like this big chunky nice round number. Bitcoin's only been above 50,000, 150-ish days.
Yep.
Excuse me, sorry.
Yeah, no worries at all. No worries at all.
And when that went off without being even a little bit relevant, the next obvious one is, do we need to get to an all-time high before people pay attention again? But it's entirely possible that we get to 70,000, and the burn from the last cycle and the skepticism are so high that retail just continues to not care. And to your, there will be at some point where number go up technology has hit a point where they just can't not pay attention anymore, and it'll drive some amount of interest. But it is entirely possible to me that it's not even something which would have been, absolutely unheard of the past cycle, getting to a new all-time high before they were paying attention.
Yeah, I view 100K. I just think that's like the number that at that point it won't be able to be ignored. But given the way that you pointed out, nobody cares at north of 50K right now, like literally no one. So why? They're going to care at 60K? To them, it's still the price is down, right? And we do man on the street content, like, YouTube shorts content. And if you go to Washington Square Park in New York City right now and ask people about Bitcoin, ask people about Solana, they won't know what the altcoins are. And when it comes to Bitcoin, they'll say, isn't the price down? So I don't know. I just don't see a world where even at 69K, you see like a huge pile in from retail, but I appreciate your take on that. In terms of Bitcoin versus other crypto assets going into this cycle, given the Bitcoin ETF is approved, one thing I wanted to bring up is, so we had James Seyffert on our morning podcast. James Seyffert, of course, one of the ETF analysts from Bloomberg. He said that his bet is that there's a greater than, call it 75% chance that this year in 2024, you get the Ethereum spot ETF approved, and no other crypto assets for quite some time. Have you thought about, the possibility of a Ethereum ETF approval, especially since BlackRock has filed for it and we know what their track record is? And how do you think that sort of impacts this cycle?
So a couple things. I mean, maybe even just to follow up on your last point, like it's not impossible to me that we get to 100K and retail starts paying attention, but they're like, it's too high now, and they're just out. Like the dynamics are really different this time. I think that we really can't overstate how brutal 2022 was to the sort of like the reputation. Now, I think there are some surprising upsides to that too, that could be sort of countervailing forces. But when it comes to other assets in the cycle in Ethereum, so I think a couple things in terms of the actual approval itself. The reason that it seems like they should is that it's the exact same damn argument about why they lost in court with Bitcoin. So it's like, are they really going to be able to avoid that? It feels to me like it's almost going to entirely be down to Gensler. Like if you look at the 5-member, group of the SEC commissioners, 2 are definitely not going to vote for it because they wrote, strenuous. They're incredibly angry that Bitcoin got passed. 2 are absolutely going to vote for it because they think it's insane that it doesn't exist yet. And so it's just going to be Gensler. And to some extent, it's going to be about how petulant, he wants to be, which fights he wants to pick. Does he want to go fight another court battle around this? Does he want to run out the clock on a term? I mean, there's sort of all these different reasons that he might be thinking one way or another about it, but I think it's almost entirely going to be down to him. What is for sure is that if these approvals don't happen, they will be back in court, facing the same sort of, scrutiny, facing an even more uphill battle given the way that decisions went in Bitcoin, because I think it's going to be seen as, as a fairly thing. And again, sort of a product of their own making by the fact that they approved the Ethereum futures ETFs. It'd be an entirely different conversation if for whatever reason they hadn't approved them, but they have. I think that Ethereum will fit nicely with the institutional thesis that is going into the Bitcoin buy, in the sense that if you sort of get way outside of our circles and everyone who's in the crypto space, it is a really easy narrative to be like, okay, cool, Bitcoin is digital gold and Ethereum is everything else that crypto can be. So those are our 2 assets. Those, from an ETF standpoint, if I want exposure to everything, right? If I just think that crypto is only interesting as a savings technology, great, I got my Bitcoin ETF. If I'm interested in that, this sort of digital gold narrative plus, I don't know, all the other crap that crypto might be, like, boom, there's Ethereum. And I'm being reductive, but only from the standpoint of sort of showing like what I think the mindset is going to be for a lot of people. It's a very comfortable, natural, gets you really everything in those two little packages and won't require all that much thinking. Now that might mean that an Ethereum ETF dynamic is a little bit different, that it's perhaps, for example, a more cyclical, like I can see something happening where the sort of Bitcoin ETF is a little bit counter-cyclical if people actually are, if institutions are actually using it as a hedge and sort of as a portfolio diversifier. It might look differently in sort of times of stress. It might have it might have bigger legs as sort of a risk off type of asset. Whereas I think Ethereum's ETF like will be very risk on, pretty much all the time, just in the Wall Street mindset. Now, a Bitcoin ETF could also be just totally risk on when push comes to shove in terms of how actual investor behavior is. It just, I think, has more of a chance to also play some different roles, or at least have some meaningful portion of the market for whom it is playing those different roles. So it kind of serves as a counterweight to whatever market dynamics there are.
Yeah, love all the details. So we had a gentleman, Fred Krueger, on the show a few weeks back. He's an ex-Wall Street guy, PhD in math from Stanford. Do you follow this guy on Twitter, Fred
Sure,
Krueger?
is frequently quoted on the show.
Oh, awesome. He's awesome. I mean, that guy is prolific right now with his content. He talks about how Wall Street wants the king, Wall Street wants the number one. Do you think that that'll play a big role in whether, any Wall Street person is buying the Bitcoin ETF versus the Ethereum ETF?
Yes, I think that it's more likely that some meaningful portion of people will only be interested in Bitcoin just because they just want one thing. And if they're going to choose just one thing, they're going to choose the one that has the longest duration, you know? But I just think that they're so comfortably different from a narrative perspective for Wall Streeters that that it'll be really easy for them to sit next to each other in a portfolio, which, by the way, isn't so different from how new entrants to this market have always operated when it comes to these two assets. There's sort of like the Bitcoin thing, and then the Ethereum as sort of like the representative of everything else.
Yeah, makes sense. And you brought up unit bias a little bit. You talked about maybe this time around, because if Bitcoin's at $100,000, the number will just be too big for people to process. Do you think about the pricing of the ETFs at all, and whether the unit bias there will positively or not impact Bitcoin at all? Because if you can buy IBIT for $29 a share, does that impact anything? Do you care about that?
It could. I think that it's probably one, none of our concern about unit bias has ever actually really played out all that much, except insofar as unit bias does less to deter people from buying like expensive assets and more to encourage people to buy shitty, cheap assets, is kind of how I would put it, right? Like, people do have a sense that if they're there to get rich, the ability to like 2 or 3x on your Bitcoin is just different than, 100x on your shitcoin.
Yep.
And so that's where I think unit bias plays out, is if that's the thing that you're looking for. I think that when it comes to sort of like the slow and steady flow of new people into Bitcoin, it really hasn't been a big barrier. However, I do think that probably having it represented in sort of this, these shares, which make it an easier unit that look similar to, the rest of your portfolio, like, it may break a little bit of the, like, how much of a percentage of a Bitcoin am I buying, because you're just buying shares that have exposure to that. I'm not sure, but certainly for the sort of the type who's buying it, just as, not particularly interested in the whole space, it's just sort of a piece of it that might matter less.
Absolutely. And on that subject, and you've kind of talked about this, Bitcoin kind of leading the cycle. Do you think the ETF will put Bitcoin in a situation where, even though historically, at least if you look at last cycle, some of the, lower priced assets, the shit coins, if you will, have outperformed Bitcoin from the bottom of the cycle to the top? You look at like Solana last cycle, right? From like $4 to $260 or whatever it went to, versus Bitcoin from 3K to 69K. Do you think that that's different with, institutional inflows into the ETFs this time around?
So I think that bull cycles always have three dynamics sort of happening simultaneously. One is the Bitcoin narrative that always leads things off. It always starts first. And for the last couple cycles, it's been largely similar. It's been institutions coming to realize, its capacity as a digital gold and what that means, or some version of that, right? Paul Tudor Jones' Great Monetary Inflation Thesis, the 2020 version, and the ETF is sort of like a part and parcel of this, but there are also narrative reasons why people are interested in buying the ETF that are sort of that. So Bitcoin is always has that sort of piece. The second part of the bull market is whatever the sort of like enfranchised crypto people thesis is for that cycle, which is an insider baseball game, but is a more sort of sophisticated upmarket insider baseball game. So I think about in 2020, we had the Great Monetary Inflation Thesis happening at the same time as you had DeFi Summer, right? Yeah. DeFi Summer was for a very small handful of folks that that had sort of were could deal with the barriers to entry because it was the complexity was super high at that time, and that was a big driver, right? So okay, you have Bitcoin going, and then you have sort of DeFi Summer, and then you have sort of the third part, which was actually bifurcated in the last cycle, and the third part is generally it's sort of like all the other shit, right? And again, I don't even mean this pejoratively, although a lot of it is bad. It's just sort of like the stuff that has the capacity to just be like ridiculous number go up stuff.
Shib last cycle.
Exactly.
Right?
Exactly. Now, what was interesting about last cycle is that whereas in 2017 with ICOs, it was all shibs, right? More or less, not the creators of projects. There were more creators of projects that were well-intentioned than we sometimes remember from back then, but by and large, what retail had access to was all shibs. NFTs added sort of this fourth rail last time around, where there was this totally separate thing for retail, where a meaningful percentage of folks who are in that market like literally didn't pay attention to anything going on with Bitcoin, Ethereum, like at all. Like it just was sort of totally secondary, totally outside their purview. I think that when it comes to this cycle, when I see these things as sort of being different or whatever, I think that Bitcoin is likely to have perhaps less of a fall off effect as we get deeper into the cycle than it has before because of this institutional bid. There's just so many new layers of new buyers that to be unlocked thanks to this ETF, that I think that you're going to have a much more persistent sort of Bitcoin narrative leading this thing throughout the cycle. Whereas it tends to sort of fade as other things kind of come up in the past, just from a narrative perspective. I think that when it comes to what the enfranchised folks inside crypto are going to be super excited about, it's an interesting moment where it's still like there's a lot of contenders for that, right? I think that there's open questions around what the new DeFi narrative is, narratives are going to be. I think real world assets are certainly a sort of contender for things that it sort of people in the know think, and it also sort of bridges into institutional, which is interesting, right? Like part of the thing that was so interesting about Larry Fink getting into this is that he just absolutely obliterated the Bitcoin versus blockchain divide. I mean, he curb stomped that in the first set of interviews after they sort of filed for the ETF. They
tokenize everything, right?
Journalists kept trying to pin this, like, oh, you must not actually care about Bitcoin. You must be interested in that. He wanted it all. He wanted Bitcoin as this thing, which was a digital gold that was, blah, 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 blah. So, talking like a true Bitcoiner, but he also wanted to tokenize all the things, right? You see this play out a little bit right now, like assets that are clearly related to some of the real world, tokenization type stuff, real world assets like Link, obviously, is, there's sort of, people who are interested in that. Then there's going to be like the shit. There will always be like the random things. I mean, we're seeing it a little bit with like AI themed tokens. That's kind of like a shitcoin narrative for the year. I don't know what I mean. I think one of the most interesting things to watch, even if you're not in it, just as an observer, is what sort of like the second or arguably second and a half or third cycle for NFTs are going to look like. I think that's going to be a major. What happens in this cycle for NFTs will have huge deterministic impact on where they end up on the other side of it. And I don't yet have super strong opinions or thoughts on what that's likely to be.
And one wrinkle there is, what if traditional art collectors that would literally be buying Picasso's, Basquiat's, and Jackson Pollock's decide that they actually care about NFTs? What does that do, right?
Well, I mean, this is the thing is like NFTs could turn into a niche, like, digital art gold, thing. They could have a resurgence as a thing where, listen, it wouldn't be crazy to me if you said, I'm from the future and 2 years from now, the way that retail got back into crypto was actually they just hated all the crappy, like tokens and stuff, but there was still some interest in these sort of digital arts and collectibles, and prices came back down. People didn't think they were going to buy houses with Bored Apes anymore, but it was like a dynamic that they liked. And that's where retail decided to play around in crypto. Like that doesn't seem insane to me as one of the possibility sets. But I do think that, whereas last time it was this sort of the Cambrian explosion and all the possibilities of all the things it could be, this time around will be a little bit more representative of what it actually is, at least for now. And I think that'll be interesting to see.
It's funny you say that because I've been saying this exact thing to my friends that are Bitcoin people. And, maybe some of them also have some altcoins too, but even though they hold those, and some of them might have 6 figures of Bitcoin, they're totally out on NFTs. And the way I present it to them is last cycle was all about, well, they could do this and this could happen. But the reality is a lot of the people executing, they weren't committed in the way that they presented themselves. And then obviously all the issues that happened with 3 Arrows Capital and Sam Bankman-Fried, and the list can kind of go on, really flushed a lot of things out. But like you're pointing out, if, some media company that has a lot of fans like Barstool Sports or a sports team or, some sort of brand that or a collectibles organization that has real brand loyalty gets into reasonably priced digital collectibles, that could be a pretty big accelerator, I would think, for whatever chain those collectibles end up on. A lot of volume could come from that, I'd imagine. I don't know. I mean, we can move on, but yeah.
Yeah, no, it's interesting. I mean, I will note that one of the things that I thought was interesting, kind of throughout 2022, really until the SBF dagger in the heart of the whole industry.
Yeah.
I would say that the NFT communities were a little bit more resilient than I think the average person would have guessed coming out. Like there was a long period, even with diminished prices, where the people who had always said that they were in it, for things that weren't just number go up, kind of stuck around more than you might expect. So I think that the question that I actually, having spent a lot of time with sort of the sports team and NFTs and all those sort of things, I find myself more skeptical of these use cases. I actually think that like internet native communities that organize around these things and have sort of like totems of affiliation seem like a more likely long-term thing. But at the same time, like I don't know. What I know for sure is that NFTs represented the first true break from the rest of the crypto industry, where you really could see something as distinct, even though it was part of the same underlying technological rails. It really just was its own phenomenon that you could care about or not care about, but it all had almost nothing to do with the rest of the space, and vice versa.
Sure. When you say like online communities, maybe video game communities, like online gaming communities, would that make more sense to you?
It could be, or just I mean, I don't think that it was an insane pursuit to try to build a community from the ground up on the basis of a thing, kind of organized around an NFT. But who knows? I mean, listen, the gamer animosity towards NFTs was another interesting phenomenon.
And gamers had animosity, I guess, to like buying in-game assets and in-game currencies, a decade ago, and that became the norm. So we have seen a history of that kind of pattern playing out where it's rejected because it's new at the beginning and then it changes. Speaking of NFTs, Bitcoin ordinals is a new wrinkle for Bitcoin going into this cycle that just flat out did not exist last time. And the volume, I mean, when you look at the numbers, it seems like it's pretty real and it's going, it's going to stick around. How do you think about ordinals going into this cycle and how they might impact Bitcoin and Bitcoin mining and, just volume on the Bitcoin blockchain?
I mean, I think that they are going to be a meaningful part of the conversation. I think that even if you don't care, you're going to be drawn into conversations around fees, which people will argue vociferously from the side of like fees are bad because what you want Bitcoin for is a relatively low cost, blah 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 blah, which is a reasonable position. Versus on the other hand, like the fact that fees are 20% of miner revenue now relative to where it was in the past is like potentially a really good thing. So I think that they're here as a phenomenon, especially because I wouldn't be surprised if we start to see more iterations of these things that look sort of unique and different, and not just sort of like a different version of NFTs.
Yeah.
There are some different sort of attributes of these things that I think will make them appealing for different types of uses or different types of people. So I don't know. I think I would be surprised if they just sort of dissipated entirely. And I think that even if you're sort of totally off the art piece, if you're a Bitcoiner, you will be part of the conversation as it relates to fees and sort of the structure of security in the industry.
Yeah, very hard to predict, but definitely, in my opinion, not going anywhere. So moving on to like Bitcoin and crypto equities, Coinbase is custodying, I think it's something like 70 or 80% of the Bitcoin, from the ETFs. Can you kind of go a little bit deep on what that means for Coinbase itself?
Well, so it's actually even with that, it's still a relatively small line of business from a financial standpoint, but it's obviously one that could grow, given that it's sort of very early on at this stage. I think that my guess is that we'll start to see this cycle. Crypto equities have some ability to move independently of one another rather than just be sort of lumped as, if crypto's doing well, they're going up, and if crypto's not doing well, they're going down. Now, there will be some unescapable dynamics, right? If crypto is going down, obviously it will reset the prices for everything in the space. But I think that, like, especially like one of the big winners from the standpoint of public perception after last cycle was Coinbase.
Yep.
It's been here forever. I mean, it's still standing from an institution. It doesn't have a whiff of impropriety anywhere. Like, it just looks like a really well-run company. They had to make a ton of painful layoffs. They maybe grew too fast. Like, there are all those sort of things. But like, I think that Wall Street has an immensely higher respect for Coinbase as an actual company, right? Like, whatever they think about crypto or not, than they did, a year ago, a year and a half ago. And I think that that's meaningful. My guess is that you'll see some of that that sort of same type of discretion, company by company kind of analysis maybe take place elsewhere in the industry, again, rather than it just being like all mining stocks move this way or that way.
Sure. And how do you think about an individual holding, Coinbase stock versus spot Bitcoin? Like, why would someone invest in Coinbase versus just buy more Bitcoin?
I mean, there's a bunch of reasons. If you're a purist and you just want exposure to the underlying asset, that's great. But one Coinbase or something like it represents like a hedged bet across the entire industry versus a bet on any asset. Like, it's kind of like a more sensible way to hold a bundle of crypto, than sort of like these bundles that have some like weird allocation, based on percentages and market caps and stuff like that. It sort of represents beta exposure to the whole space, but perhaps in a shell that you're have more confidence in because of their trajectory or their history. I think it's also a chance to bet on theses, right? Like, you could be interested in buying Coinbase if you're interested in sort of a layer 2 thesis. If you're interested in the institutional bid thesis, like, it seems like a one of the companies most likely to benefit from what comes next. So, there's all sorts of reasons why people might want that versus just exclusively Bitcoin. It's just sort of all investment options in a increasingly diverse set of options.
Absolutely. And how do you think about Coinbase versus MicroStrategy?
I think that MicroStrategy is a lot closer to just a Bitcoin ETF proxy than Coinbase is, at least as current. I think that if you're investing in Coinbase, it's because of a set of theses that aren't just strictly based on the performance of Bitcoin, whereas MicroStrategy is a little bit more directly a bet in that ecosystem.
Fair. And when it comes to mining stocks, how impactful do you think the halving itself will be on mining stocks moving forward, especially now that we have things like ordinals, increasing the volume on the Bitcoin blockchain? Like, I'd love to know how you think about mining stocks for the rest of the year here in 2024, pre and post halving.
Yeah, I mean, I think that what you're seeing, what it appears to me that we're seeing is that the halving is mattering in the context of investors figuring out what different companies' cost basis is. So rather than treating all miners monolithically, which is like what like probably how they moved, call it a year ago, year and a half ago, as we're in sort of the depth of the bear market. Now you have sort of analysis looking at like, how much does it actually cost? Like what price does Bitcoin have to be for company X versus company Y to be mining at profit? I think that is going to, to the extent that investors are getting more sophisticated, they're going to look at that sort of stuff. They're going to look at the trade-offs between scale, efficiency, all these sort of things, and it could have a fairly big impact on which sort of companies that the market gives more access to capital to.
Awesome. And so moving on to future Bitcoin equities, Circle, people believe is going to be going public, or they may have even officially announced they're going public next year. I think people believe that Kraken is going to go public. It's pretty significant to me that we're going to have two new companies, both of which are kind of household names in the crypto sector. Circle definitely is. How do you think about this in the landscape of the different Bitcoin and crypto equities? With Circle, I kind of wonder, is this going to be a mainstream DeFi organization moving forward? Like, what do they get to after stablecoins? How do you think about Circle and Kraken potentially going public?
So let's talk about Kraken first. I
Sure.
think that Kraken fits more in a template that investors know, right? So like we were just talking about why someone would be interested in Coinbase. I think that the logic is going to be similar with Kraken. Long duration US based exchange that doesn't have the sort of like the stink of sort of these offshore exchanges around them, has successfully navigated this market, continues to build out new products, blah 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 blah. I could see people being interested in Kraken relative to Coinbase strictly from a sort of like a market opportunity standpoint, because it's like, okay, well, the smaller players potentially have more room to gain, right? To grow. So, but I think that the logic is going to be much closer to sort of why someone would be interested in Coinbase right now, as opposed to sort of some new phenomenon. I think Circle is a little bit different. I think Circle is really going to be about a bet on stablecoins in the U.S. and what the stablecoin system is going to mean. And I think that a lot of the price discovery is going to represent investors making bets on how big a deal stablecoins are going to be in the larger U.S. system going forward. So I think if it pops and it goes well, I think it's going to be an indication that there's a sense that stablecoins are going to play a much bigger role in the larger sort of like dollar financial system going forward.
And that's a perfect segue for the last thing I wanted to cover, which is you've been discussing, CBDCs versus nationalizing stable coins. Gun to your head, if you had to make a bet, do you think the United States in the next, call it 15 years, will move forward in the CBDC direction or in the nationalizing stable coins that they don't create themselves direction?
I bet a significant amount of money that we never see a US CBDC, or at least not in the predictable future as such. I just think that it's one, it has for whatever reason become this unbelievably outsized political issue, which means that you have half of the country who's never even thought about these issues, who's vehemently against it. And so it's kind of like, dead, strangled in the cradle in some ways. So to the extent that you cared about that, and I just don't think anyone's going to expend the political capital to try to win that argument back. And so I think the CBDCs are sort of dead on arrival as it relates to the U.S., especially because there is this other thing just sitting there, which is that people look around and all of a sudden these U.S. dollar stablecoins are settling ridiculously large volumes already, working well. They're all trying to edge towards more, not less respectable, right? You've seen an interesting turn recently in Tether's narrative and rhetoric, where they are continuing to emphasize the fact that they're sort of like the world's, digital dollar versus just the US's, but they are certainly emphasizing their bona fides with US law enforcement in a way that they didn't before. They're making some different decisions than they might have before. They're clearly positioning for a world in which the US government has more of a relationship with dollar stable coins. And remember, like, the US has a long history of not fully nationalizing financial innovation, but kind of making private sector innovation work with the sort of dominant system. So I can see for sure some sort of weird hybrid where a Circle or a USDT has a client base of one that is the U.S. government, and it's sort of deeply integrated in a way that it's not now. And I think that what I will be interested to see is whether there is an increase of sort of narrative discussion like we had from, I think it was Waller at the Fed last week, talking about how U.S. stable coins potentially extend the dominance of the dollar into another generation. I think anyone in the crypto space who's been paying attention resonates with this and has been saying this for years, that even in a world where maybe there's more concerns around sanctions and the weaponization of the US dollar, right now, definitively it is the case that the dollar is the most in-demand currency anywhere in the world. It is not just the world's reserve currency from the standpoint of, big trade and official things. It is also just the preferred currency in back alleys and markets everywhere. Just is the case. And the folks who are using it as such care less about sanctions on Russia and stuff, right? Than maybe those sort of big central banks in terms of where their holdings are. And so this technology, which just radically increases the ease with which people get to already use that system, to me, just very obviously could extend the sort of US dollar hegemony into another full generation, multiple generations. And I think at some point, the US political establishment probably decides that that's a good thing and that they shouldn't be so short-sighted about it. And it might be as simple as getting past this stupid stablecoin legislation where they've decided that both state and federal regulators can have a hand in this, and they're fine with that. But that my bet, I guess, to sum it up, is no US CBDC, almost certainly a closer relationship between the US government and some or multiple US dollar denominated stablecoins in the future.
And my follow-up question was going to be whether that, dominance by US dollar stablecoins like Tether and USDC defends the US dollar's position as global reserve currency. It sounds like it does.
To me, 100%. Now, it also arguably weakens further the Fed's ability to control the dollar supply. But I think that the reality is that the Eurodollar system already makes that nearly impossible, right? It's just the amount of dollar equivalents that exist in the world that aren't actually US dollars, that the Fed doesn't even have any insight anymore into how many US dollars there actually are in the world, much less have the ability to actually change that supply on a dime. It's just sort of not really the way that they enact change. So I think that ultimately the rational trade-off of everyone using dollars and all the good things that means, it will outweigh less control over the dollar system, because people realize that they just don't have that much control already.
Fantastic detail. Last question, Nathaniel. Is there anything that we didn't discuss today? Any questions that I missed that you think are critical to talk about, right today, February 20th?
I don't think so, man. I think that we are still at the very beginning of a cycle, which is going to really shape a lot of the rest of crypto's sort of near-term life. I think that there are just these huge outstanding questions that maybe we didn't have before. When will retail come back under what auspices? And I think is a really meaningful question. I don't think it's as clear cut as it used to be, which is just enough pressure. Look, I mean, I'm sure that everyone listening has experienced this, but like the conversations with people when you're in the crypto industry are just different than they were, pre-Luna, pre-FTX and all those sort of things. It's just, I mean, we're back a decade to crypto is just for criminals. And unfortunately it's, there's more evidence of that now. So I don't know what retail looks like. I think that the shape of the entire NFT space is going to be really, really determined in some ways by what happens this cycle, how much it looks like the last one versus there's new territory. I don't think it's a binary of like, does it exist or not? It's more just in what capacity exists and for whom. I think that DeFi is the thing that faces the biggest regulatory hurdles of anything. What DeFi actually gets to do this time around is not going to be based on sort of the cleverness of people building interesting DeFi primitives. It's going to be based almost entirely on legal battles that are fought in courts. And so that'll have a major impact. And then there's Bitcoin just kind of humming merrily along, recruiting new people in the form of these sort of institutional buyers. So it really does feel like a very seismic change between the past. And I think this period sort of like of the collapse up into FTX, and then now sort of from, the ETF onward, I've said this numerous times. I think that the moment that will be viewed as halting what could have been the utter destruction of the industry will be BlackRock announcing their ETF proposal. I think more than anything else, that'll be seen as the Larry Fink putting his his body between more crypto chaos. I think that if that hadn't happened, if that hadn't shifted momentum, it could have looked very different. Now, I don't think the crypto would have gone away. I think that part of what makes Bitcoin so strong is that there's now millions and millions of people who will never sell their Bitcoin for any reason, and that creates a floor and a defense that's totally unlike basically any other asset. But I do think that when it comes to the sort of the way that history will see this last cycle, there'll be this hinterland period between FTX being exposed as sort of this massive SAM fraud and the BlackRock ETF proposal announcement, where things could have gone a lot of different ways, and all of the forces were competing all at once, to try to drive them in the direction that they wanted. So we're on the other side of that now, and trying to kind of face forward or project forward on the basis of what happened before that cycle, I think is going to be harder than it's ever been.
And those two events only a year apart, more or less, right?
And 6 months apart, really.
Unreal.
Because I think it wasn't. I don't think it was just the approval of the ETF. I think it was just the
filing.
The filing. So it was really a 6-month period. Now, fucking brutal 6-month period, which is absolutely awful. But
good time to buy.
Yeah, it was.
Incredible conversation, Nathaniel. NLW. Look, so obviously the Breakdown podcast, your podcast, which if people aren't listening to this, they totally should. I mean, it's essentially a newsletter that you read, right?
Yeah,
I mean,
it's a news analysis. It's very different than, I think it's something that podcast isn't even exactly the right frame. It's a news analysis show, where it's 15 minutes a day on what the actual news is, but then sort of my take on it.
Yeah, so if you search The Breakdown on any podcast platform, it's going to come up. Your YouTube channel right here we have pulled up, which is just Nathaniel Whittemore Crypto. I see you did a video interview with Lynn Alden, absolute badass, so that must have been a good one a few years back. And is the website nlwcrypto.com?
No, breakdown.network is where you can find all the information. I think that this is out of date.
Okay, there you go.
Breakdown.network.
Awesome. And anywhere else you want to send people?
Nah, I'm NLW everywhere, and breakdown.network has links to anything you could possibly want.
Incredible. Well, Nathaniel, thank you so much for joining again. The second time on the show. We hope to have you on again in the future. As usual, great insight. And just can't wait to continue listening to your show, to your podcast.
Cheers, guys. Appreciate you having me.
Absolutely. Have a good one.
All right.
Cut him off at the end by accident there, ladies and gentlemen. NLW, Nathaniel Whittemore, absolutely crushing it as usual. This has been the Bitcoin Show. We do this every Tuesday at 2 p.m. Eastern time. Show was brought to you in partnership with Trust Machines. Trust Machines, of course, focused on growing the Bitcoin economy by building applications all on Bitcoin and its various layers. For more information, check out Trust Machines on X platform, on Twitter. That's at Trust Machines Co. or visit trustmachines.co to learn more about the future of building on Bitcoin. If you want to support this show and support our partner Trust Machines, then check out the pinned tweet on the Twitter Spaces. Clemente, the producer of the show, will have it on screen. Also, we are looking for some feedback, I should say, through user research about Bitcoin and DeFi. So just check out that pinned tweet. We got the form pulled up right here on YouTube. Also should mention that we have another awesome guest next week, 1 week from today, Pete Rizzo. Long time, journalist in the cryptos, really the Bitcoin space. Very few people are like on the beat of Bitcoin for as long as Pete Rizzo has been. So that will be absolutely electric. Also his second time on the show. Can't wait for that one. Hope you enjoyed today. Make sure you check out Trust Machines. Make sure you check out the Breakdown with NLW with Nathaniel Whittemore, today's guest. Catch you guys next time. Thank you so much for listening.